Hello and welcome to Season 3 of the Regtech Show. In this episode, we look at the biggest issues facing fintechs, financial organisations and institutions. From cybersecurity to Brexit, the regulatory complexity surrounding these organisations is only growing. So, to make sense of it all, we speak with fscom, one of the leading compliance firms in the UK and Ireland. First on the table is Brexit. With fscom being located both in the UK and Ireland, their expertise will be critical.
My name's Jamie Cooke. I'm the CEO of fscom and I also take a leading role in our investments team.
Incredible. So Jamie, what does Brexit mean for the fintechs?
Unfortunately, I probably think many of the impacts of Brexit for fintechs could be negative. I am a proponent that change brings positive and negative aspects to it, but ultimately, if we don't get a trade deal negotiated, we will leave on WTO rules. There will be no single market access for UK financial institutions, and that then leaves them in the situation that they have a revenue or a cost choice. The revenue choice is to give up any revenue that they make from European-based consumers, or they could therefore then have a cost choice which would be getting authorised in another European jurisdiction in order to provide services to European consumers, and that would clearly have a cost implication. So largely, whatever way you look at it, from a fintech perspective, Brexit is not necessarily positive.
Well, I think it's fair to say that with Brexit, we're still in uncertain times, so we don't really know for sure what's going to happen. But one of the things that we do know is that there are plans that following the implementation period, when we have the ability to make changes, payment and e-money institutions will be able to use any OECD bank for safeguarding. And of course, that really opens up the market. So at present, they are restricted to being only able to safeguard with EEA authorised credit institutions. And the market is difficult. There's not that many banks in this area who are willing to give safeguarding accounts. So that's a huge change. It's going to be difficult to want to make too many changes because firms that are authorised both in Europe and in the UK will want to have their operations relatively similar. So equivalence is a benefit to these firms. But if we could make changes, there are two that I think we should make. The first one is we should change UK insolvency legislation. What happens is a lot of payment and e-money institutions will use each other to provide payments. So there's a chain of payment service providers. But in that instance, one payment institution cannot safeguard on behalf of the underlying customers of the other payment institution. And so you end up having a situation where both have to safeguard the same set of funds, which clearly costs a lot. But if insolvency legislation was changed, then one firm could safeguard for the benefit of the underlying customers, and that would remove a lot of complications.
We wanted to see how financial organisations were looking at Brexit themselves, so we brought in Banking Circle's Mitch Trahan to tell us more. So can you tell me, what are some of the key regulatory themes that you think will have some of the biggest impacts on Banking Circle in 2020 and beyond?
Of course, so the largest part to mention of Banking Circle is we've just achieved our banking licence. So we've moved from an authorised payment institution into a bank. So in the UK, we are a UK branch of a Luxembourg entity. So the biggest thing this year for us is going to be Brexit. The UK entity is becoming a third country branch because of passporting and everything else there that's changing. So fscom help us because we were a UK branch of a Danish entity under an authorised payment institution, and now we are a UK bank branch of a Luxembourg entity. But with Brexit, it's a third country branch requiring so much more locally here in the UK. So under passporting, as fscom have been helping us, there's certain amounts you can rely on your parent within the EEA. After Brexit, that reliance changes. There's more expectations to be locally here in the UK. The regulators expect there to be much more local activity and local people and local risk management. And it's that risk management piece, the regulatory compliance piece, and the new UK laws that will come out is where fscom have been working with us.
Incredible. Following on from that, how do you think Brexit is really going to shape some of the domestic regulatory changes going forward, especially for payment organisations and even new style banks like Banking Circle?
Really, really interesting, and that's the question on everyone's lips. The UK can go down one of two roads. We can either still stick with what the EEA are doing, the EU are doing, and have that equivalency or really take this as an opportunity to look at what worked, what didn't work, what are we shackled to.
Now, it's not just geopolitical movements that are disrupting financial organisations, it's also technology. Cybersecurity has become increasingly important for the banks and regulators to get locked down.
My name's Simon Whittaker. I am the cybersecurity consultant for fscom.
Incredible. So Simon, can you tell me, given the recent data breaches, what are some of the biggest threats coming down the tracks for financial services companies?
Yeah, I think it's a really interesting question. We're starting to see that a lot of the breaches that are coming in are as a result of third-party or supplier issues. And there was a recent report from the FCA which stated that 17% of the issues that were reported to them were due to supplier or customer issues. And that's quite a high amount. That's the largest of any of the other amounts that were provided. So I think one of the things we're going to start to see is that financial institutions are going to have to start auditing and understanding how their suppliers are performing, what their suppliers are doing, and the levels of security that are applied to those suppliers.
So how do you think the regulators are going to respond to some of these threats?
Well, I think there's a few different areas in which they are going to respond. The European Commission have put out a consultation about operational resilience, which actually closes on the 31st of March, where they are trying to understand what we as organisations think should happen next. And I think once the results of that are released, I think that's when legislation is going to follow. Now, we have also seen that legislation is going to take place or be enacted potentially before September of this year. So that's going to be a very, very quick turnaround, and I think it will contain items including supplier relations, supplier policies, training of staff internally, and including things like making sure that risk is not something that is outsourced in any way, shape or form.
So naturally, 2020 is all about 5MLD and regulation. But I think it's important before we look at what this year has to bring, we look back at last year. So 2019, we saw a record number of fines. We saw the biggest scandal in financial crime history with Danske Bank and I believe truly it is just the tip of the iceberg. And I think that sets us up for forecasting 2020. So yes, 5MLDs here. It means that certain firms, like crypto firms, for example, exchanges and custodian wallet providers, are suddenly finding themselves in this world of financial services regulation. And let's be honest, these guys are very good at the technology side. And it's about making sure that people have, forecast what needs to be done, have the right people doing the right things and the right processes. Naturally, with regulation comes supervision. So we know now the FCA is going to be the supervisor for crypto firms, crypto assets. What we're looking for and what I'm certainly predicting for 2020 is an increased scrutiny and focus on demonstrating effective governance, the enforcement of a strong culture of compliance. And I like this phrase. There's a very fine but very specific difference between doing things right and doing the right thing. And I think Danske Group is unfortunately for them, they are now the case study for the rest of the industry to be looking at. And for me, having an effective governance, having effective culture, it is going to be the tip of the iceberg for regulation in 2020.
Looking at what they've done across the fintech space, they know payments inside and out. They know the regulations inside and out, both on the regulatory compliance side and on the financial crime compliance side. So when it comes to what I was saying before about training, bringing things to life, getting that regulation and actually making it meaningful in policies, processes, that's where fscom are helping us a lot. From an authorised payment institution, we've become a bank. As part of that, there's an increased requirement for governance, policies, procedures, etc. And we work closely with them in developing that part for the UK branch.
Now that's all we've got time for today, but thanks for watching and make sure to catch the rest of the series coming soon at www.fintech.finance. See you then.